And if all that success leads to more money in the bank, there are new ways to invest it, manipulating the home loan market, if you wish. Helen Wellings reports.
Housing affordability is at a record low, so it's really tough for people to get into the market and buy their own home at the moment.
Getting into the housing market and being able to keep up those repayments. That's the challenge now for Australian consumers. Lenders are bombarding us with promises of different loans, boasting lower interest rates. But just how economical are they?
If you're paying more than 30% of your gross annual salary to your mortgage repayments, you're under mortgage stress.
Tonight, we assess the newest loans on the market. Green mortgages, carbon neutral home loans, extended repayment terms, tempting no deposit or 106% loans. But first, the recently launched equity finance mortgage, claimed to be totally different from the pack. How does it measure up?
I knew how much I was paying to raise 2 children and the difficulty for me knowing how much I could pay back on a mortgage and knowing that that wasn't enough to buy a 3-bedroom unit.
Bryony Black's been renting for 12 years because all she could afford to buy was an inadequate 2-bedroom place. But all that changed when she discovered a loan she could afford, the Equity Finance Mortgage, or EFM. Now at last, Bryony and her teenagers have the spacious 3-bedroom townhouse they dreamed of.
Look at all these cupboards. That's fantastic.
The way it works is that Equity Finance Mortgage gives you up to 20% of a home's purchase price, and you pay no interest on it over 25 years. That's right, no interest on that 20%. You also take out a regular mortgage for the rest that you need. But the beauty of that equity mortgage contribution means it saves you up to 20% on interest and principal payments.
I've paid a 20% deposit. I've borrowed 60% of the purchase price, and then the other 20% is from the EFM.
I think the key target markets are first-time buyers and upgraders and refinancers.
Chris Joy, founder of Rismark International, is the architect of Equity Finance Mortgages, which are now available around Australia through Adelaide Bank. So nothing's free. What's the catch?
The lender of the Equity Finance Mortgage is entitled to share in the gains or losses.
So when you sell, the lender takes 40% of the profit or capital gain. But if there's no price increase on your house, you can just repay the 20% equity mortgage. No interest or charges added. If the value drops, the lender suffers the loss.
The trick for borrowers is to use this product as a smart tool for them to A, get into the market, and then obviously B, refinance in traditional mortgage when their circumstances will allow them.
Dennis Orick, of consumer finance researcher InfoChoice, says as long as borrowers understand they give up 40% of capital gain, the Rismark Adelaide Bank Equity Finance Mortgage is a great solution to cheaper repayments within a regular 25-year term.
It is trying to answer the issue of affordability, and it's doing it a hell of a lot better than some of the suggestions on the table, which are 40, 50, 60-year loan terms.
Longer-term loans are another option because they do lower your monthly repayments. But be warned, if you take a loan over 40 years instead of 30, it's going to cost you around $150,000 more.
A 40-year loan term is going to cut your repayments by 6%, but it'll increase your interest bill by 42%.
A third option, the no deposit or 106% loans. But again, be warned, unless you can maintain a high disposable income, they're a huge risk.
The big risk is property goes down and you have negative equity. And there's a number of examples throughout metropolitan Australia where we're seeing that.
So you're going to be left with a big debt?
Could be left with a big debt after you sell the house, you've still got a debt.
We wanted a green home with rainwater tanks, solar power, solar hot water.
There are also new loans around that capitalise on our concern for the environment, like Bendigo Bank's Generation Green Home Loan at 7.6% variable rate, no monthly fees. And to qualify, you must install a minimum of 2 nominated energy-efficient items. But Nicole Rich of the Consumer Action Law Centre in Victoria says it's the price of a loan that counts most.
I certainly think that if you shop around, you're going to get a better mortgage deal than you're going to get off the one that's offered on the Bendigo Bank website.
MyRate advertises Australia's first carbon neutral home loan, so named because the company's operations have been certified as carbon neutral. Marketing aside, at 7.19% variable interest rate, Dennis Orrick believes it's also one of the better deals around. But he advises, before taking out any loan, shop around. Try to negotiate lower interest from the advertised rack rate and beware of exit penalties.
Don't sign it until you truly understand it, because it is a big commitment that you are making.
Go for the best home loan price that you can get, and don't worry about all the other marketing tricks that they try and use to make you think that they're getting you a better deal.
Good advice.